India's central bank, that is the Reserve Bank of India, concluded its three-day Monetary Policy Committee meeting in financial capital Mumbai on Friday. RBI has decided to keep the repo rate unchanged at 6.5%. Governor Shaktikant Das announced this makes it the 11th consecutive time the repo rate has remained unchanged at 6.5% for the 11th straight meeting.
The Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate at 6.75%. The MPC believes that only with durable price stability can strong foundations be secured for high growth. Accordingly, the MPC decided to keep the policy repo rate unchanged at 6.5%.
The RBI also reduced the cash reserve ratio by 50 basis points to 4%, bringing it back to the level before the policy tightening cycle began in April 2022.
To ease the potential liquidity stress, it has now been decided to reduce the cash reserve ratio, that is, to reduce the CRR of all banks to 4%. The reduction in CRR is consistent with the neutral policy stance and would increase primary liquidity of about rupees 1.16 lakh crore, that is 1,16,000 crore.
And the GDP projection for financial year 2024-25 was also slashed to 6.6% from the earlier 7.2%.
Real GDP growth for 2024-25, that is the current year, is now projected at 6.6%, with Q3 at 6.8% and Q4 at 7.2%. Real GDP growth for the first quarter of 25-26 is projected at 6.9%, and the second quarter of 25-26 at 7.3%. The risks are evenly balanced.